Hi everyone, and welcome to the next episode of the HeelanHub podcast, the show for small business owners. I'm Dan Heelan, and on today's show, it's just me talking to you today, as we're in January 2025 at the time recording this, about tax returns. We get a lot of inquiries this time of year of people wondering, should I be doing a tax return this January? And I thought it'd just be great, just a very short one today, just to remind you of the rules and whether you actually do need to do a tax return, and a bit of a recap, I suppose, on when you need to do one. So hopefully you'll enjoy this one. So let's get into it. So tax returns. Before we get going though, quick reminder, we did chuck these up on YouTube. So if you are interested in listening to this in the background or watching me half talk at a camera whilst recording these things, then you can check that out on the YouTube channel at HeelanHub. We've separated it from our normal Heelan Associates YouTube channel of all our educational guides and things that we do on there, just because some people asked us if we were going to put it on YouTube, so we thought we would. So if you do fancy that, go there. It's also a really nice way to interact with you all, because the comments section at the bottom of the video means that it's easier to kind of reply and talk to you all. So please go and do that. So then, tax returns. When do you need to do one? Let's just recap then on the various things, because we're in January 25. There'll be loads of stuff out there saying, look, you might need to go and do a tax return. So how do you know if it's you? So let's have a quick reminder about the basics of registration to begin with. And we're talking purely about self-employed here. So we're not talking about rentals or just generally whether you need to do a tax return. There can be lots of reasons why. But in general, the law, so where I sit in this little office where we record these videos and the podcast, there's a shelf behind me. There's 22,000 pages of tax law on there. And oddly, the bit about whether you need to do a tax return comes down to two parts. And it just says, look, if the revenue issue you a tax return, you need to do a tax return. So you just have to do that. The second one says that you need to do a tax return if you need to tell the government that you need to pay some tax. So what the Revenue and Customs have done is put some guidance together to say, okay, look, in these situations, we think there's likely that you're going to owe us tax, so you should register for a tax return. And where self-employment's concerned, that's if you earn over £1,000 in the year from your business. And the reason £1,000 is because there's something known as the trading allowance, and I think we've done other podcasts on this, which allows you to earn up to £1,000 tax-free. I often joked that it was legalizing Avon or Herbalife or all these other things where, you've got like a side hustle income that many people have, but you don't really earn that massive amount of money. And in theory, those people, when they started to earn even a few pound, would have to register for a tax return. Now, when this trading allowance was brought in many years ago, it instantly took those people out of having to do a tax return. So it's a very useful allowance, but that's why that's the case. So if you earn over £1,000, you would need to register. Sometimes you need to register to prove that you're self-employed. So certain benefits, certain tax-free childcare deductions, all these kind of things might need that. When you register, you get a 10-digit number, UTR, a unique tax reference, and that's all part of proving that you're self-employed. You might also want to make voluntary Class 2 national insurance contributions, which you might want to do to things like state pension and certain other benefits. It's a special type of national insurance that's paid by self-employed people, and it's pretty sort of cost-effective, I suppose, for what you get for the small amount that you'd make. So sometimes you need to do that. And we find every year, if you can get in weird situations where you've actually registered for a tax return for some other reason, so you're actually paying it under, say you've already got one because you earn a certain amount in your job, or you've got rental income or something like that, and then you then go and become self-employed. And what happens is that sometimes, because you're not registered for Class 2, out of the woodwork later down the line, the revenue adjusts your tax return and things like this. It's a very common challenge. So getting that right at the beginning is quite interesting and quite important, I think. So have a look at that if that's the case. So and as a result, often it's worth registering even if you don't have to. And that may lead you to have already registered for a tax return. So when we talk about this particular January, let's think about dates. And it's always difficult on a podcast or on a video to kind of draw it out. So bear with me if you're out and about in the world trying to picture this. But imagine a line. And in that line, we're going to take the tax year. So we're going to take it from the 6th of April to 1 year to the 5th of April the next. And all we're worried about is, when did you start your business? And when did you tell the revenue that you started your business? Because where you registered and what date you put when you registered, if you registered, will determine what tax return you need to do and when you need to do it. So if we take that line I was describing that runs from the 6th of April to the 5th of April, you can have the 6th of April 2023 to the 5th of April 24. That's the line I want you to picture. Now on that line, if we said that you started a business on the 1st of January 24, So you got up, you did your Christmas bit and you went, new year, new you, I'm going to go and start a new business. On the 1st of January 24, you're in that 23-24 tax year. So it's that tax return that's going to be needed. Now, the 23-24 tax return is the one that's needed this January. So what they do is, if you imagine, you earn money between, in this example, the 1st of January 24, so that a little bit of the line that's left, you're going to go up to the 5th of April 2024. And then your tax return, then they give you all that time round to 31st of January 2025 to be able to submit that tax return. That's where we are now. So if you think about it in short, if you started your business after the 6th of April 2023 and you told the revenue that was the case, then you're likely to have to do a tax return right now. And if you really don't know, but you know you've registered, you can log onto your online account, your personal tax account, and you can have a look there and just see if it tells you there's a tax return available. That's the most easiest way. If you've not got a personal tax account or a tax account where you can register to do a tax return, go and get one, because they're really useful things. You're going to need them through the lifetime of your kind of dealings with the revenue as a small business owner, as a sole trader in this case. So go and have a look at those. Now, if you've not registered at all, then they're not going to know about it. However, if you've done one in the past or for any other reason, or you already did one last year, so say you were a sole trader last year, and in that line that we're talking about from the 6th of April 23 to the 5th of April 24, you've not done anything. You might think, well, I don't need to tell them I earned under £1,000 in that year. Doesn't matter. The likelihood is if you did a full tax return the year before, they're going to have issued you another one now. And we see this time and time again, people will end up with a fine for not doing it. It's an instant £100 fine, and then the fines keep going up to about £1,600. So go on again. If you've done it before, you'll have the online thing. Go on, check that you don't need to. Now, you might be thinking, well, okay, I'm listening to this near the end of January 25, and I know that I did start my business after the 6th of April 23, and I do need to tell them about it. What shall I do? Well, you can go and register now. You've still got time. Go and register now and do it. And what is likely to happen is they'll give you a slightly longer sort of deadline than 31st of January, because they know that you're going to need time. So although your tax due date would still be the 31st of January 25. So with that line we talked about, so again, I keep saying the dates because I'm conscious you can't see it, 6th of April 23 all the way to the 5th of April 24. Now, your tax due on that year is due to be paid on the 31st of January 25. So this January, as we're recording this podcast. So if you do get an extended deadline because you registered at the last minute, your tax would still be due on that date. You might think, well, if I haven't done the tax return, how will I know what to pay? Well, that is a problem. And all that will happen is they'll charge you interest when you finally do submit the tax return and it's late. So just bear that in mind, that you do need to do it, and that your tax is technically due. So if you can, if any way possible, I would try and get your tax return done by the end of January. Now, you might think, can I get my docs together for everything else? Worst case, what you could potentially do is there's nothing stopping you submitting the tax return to the best of your knowledge and the records you've got available up to by the end of Jan. And you actually get 12 months to amend it. You can go online and literally change it. So that would also stop a fine. So if you've got most of it, but maybe there's the odd thing that you want to change, you can also do that later. There's always an argument to say that the revenue might look at amendments as a concern, and that brings you higher up in the chances of getting investigated. But in my experience over the last 18 odd years, I've not seen that when that's the case. I often thought that, but I've got no data to say that would be the case at all. So that amendment window is there to be used. So if you need to have a look at that. So that's that line we talked about. So recap, 6th of April 23 onwards, and you started your business and you earned over £1,000, you're going to have registered. Or if you've already registered during that time and told them that's when you start your business, it's likely you're going to need to do a tax return. Now, quick reminder, because using that example we used where you started it on the 1st of January 24, just a reminder that what that return captures is that very small period of self-employment for 1st of Jan to the 5th of April 24, but it also captures your entire year's taxable income from the 6th of April 23. So if let's say you've started a side hustle, that's your little small sole trader business on the side, but your job, you're employed all year from the 6th of April all the way around to the 5th of April 24, then you actually still have to include your employment figures for the full year or any other income that you had during that period. So you've got to put it all in there as well. So that's the easiest thing to remember on there, is that it all needs to go in. So easy summary of whether you've got to do a tax return for this Jan then. Did you start a business after the 6th of April 23? did you tell the revenue about it? If you did either of those two things, you're likely to have a tax return. If you didn't tell the revenue about it, you probably still need to do one. So you need to register and tell them about it, and then you can get one, but you might get to be able to pay it slightly later. And again, the tax would still be due, but the return might be due slightly later. Now, the other thing to just kind of caveat and wrap this up is that and it's probably another podcast, I think we did explain this on another podcast about payments on account, and they can shock people. So as a self-employed person, not just a self-employed person, but this is when you tend to see it the most. When you earn over £1,000 worth of tax, when your earnings are enough to have paid £1,000 of tax, I should say, or more, nearly always they'll want payments on account. And what that means is, using our line again, you've earned all year. You've then had to submit your tax return and pay your tax for that year by the 31st of January 25. Now, if it turns out that that's over £1,000, and there's other rules, but just keep it simple, for most cases, it's going to be the case. They're going to say, let's say it's £1,200. They're going to say, I like that £1,200, but also we think you're going to earn the same money again. So what we'd like to do is we'd like half that money again up front, almost. Most people see as upfront. It's probably not upfront, but that's how most people feel that it is. So we don't want another 600 in the January 25. And then on top of that, we want the other half of it in July 25. And you might think, well, that's weird. Why do they want 2 years tax in a short period of time? Well, it's because what they then do is when you get round, do another line underneath. Now we're talking 6th of April 24 to the 5th of April 25. When you get round to doing that tax return, if you earned exactly the same amount of money, and your tax bill was £1,200, you've already paid it. They offset those sort of upfront payments that we're talking about against that payment. And then the only thing you're paying moving forward is those £600. So in the second year, it doesn't feel that bad, but it's the cash flow of it all. And the reason I bring this up is because in this first year, if you leave it to the last minute and you've got substantial tax to pay, so over £1,000 in this example, you could have a double bubble of, payments on account plus this balance, and it can be a real drain on your finances, especially after Christmas. So just bear those things in mind. Don't leave it to the last minute. So there we go. Hopefully that's given you a bit of an idea about whether one is due or not. I mean, I know it sounds obvious, but the obvious answer is log on to any online portal that you've got with the revenue. If you've never had an online portal, you've never done a tax return, the chances are you won't have one issued, but it doesn't mean that you don't need to do one, because going back to my original statement about 2 reasons why, the second reason is that you would have to pay, you've got to pay tax. So if you earn over £1,000 of self-employed income, let's say you got another job, for example, there's a very likely chance you've got to pay some tax. You should be registering. So go and do that. Like all these things, if you don't know, the revenue are actually pretty good. If you phone them and ask them, they will probably tell you, or web chat. Sometimes this is maybe even a better way of getting hold of them these days. Then they will tell you. And obviously you can seek out accountants and other people to help you out with that as well. So there we go. Hopefully that's recapped and either put your mind at rest, or you're going to have to get going, as this show probably comes out middle of January and you haven't got long left to get going. So go do that. If you have found today's show valuable, please do make sure you subscribe both via the YouTube channel if you want to watch it that way, or on your favourite app. I know a lot of you listen through Spotify. If you can, just a few comments and a review, it really helps the visibility, can't even say the word, of the show. So if you'd have a few moments, that'd be great. For more business insight and tax tips, be sure to connect with me and my great team on all the social media channels, including, of course, YouTube, Insta, LinkedIn, TikTok, if it's still available in the UK, Twitter, etc., Facebook. And you can also sign up to our HeelanHub Herald, which is an email direct to your inbox every 2 weeks. And it contains even more tax tips, insight, blogs, all that kind of stuff. And you can do that at our website,